This is a question on everybody's mind. Will the stock market fall another 20% this year? Yes, last year Indian markets didn't fall, but people are concerned whether it will fall 20-30% this year. This is a very difficult question to answer. There is absolutely no certainty when it comes to stock market performance in the short term. Stock market performances are determined by a lot of various factors, and in this video, I will try and explain those factors in detail to you. So please watch the complete video. The first and the simple thing to do is look at historical patterns. Of course, the past performance is no guarantee for the future performances, but it always makes sense to look at the long-term charts and the performance of the stock market. You would see that in general, stock markets has given good returns over a long-term period. So past returns will just help you to give you some kind of a comfort that markets always go up in spite of seeing severe bit of downtrends. The second and the most important of all this is the economic condition. Whether you like it or not, the GDP numbers are very important. The production numbers are very important. The manufacturing numbers are very important. The service numbers are very important, because at the end of the day, if the economy does well, the companies in that country does well, and if the country does well, the stock market in general should do well, isn't it? Talking about performance of companies, I would like to highlight one important thing. Companies are slaves of earnings. At the end of the day, you invest into a company so that you earn money out of it. And if the company does well, the share price of that particular company does well. And if the company does poorly, the share prices start tanking. So please watch out for the earnings growth and then determine whether you want to invest, hold, or sell off that particular company. The fourth point on which we don't have any kind of a holding is global events. You saw that extremely high in the last 3-4 years. There was a pandemic, there was a war, there was slowdown, there is recession, and it is very, very difficult to predict these kind of global events. Inflation affected us, interest rate affected us, and if you are an investor, please be very watchful of these global events. And finally, what matters the most is the investor sentiment. If you are someone who's very bullish on a certain stock, you will go and buy, and on the other side, if you're someone who's very negative on a stock, you will go and sell. Therefore, it is important to understand the investor sentiment to know whether the markets are expected to go up or go down in the near term. While these are 5 factors, there are many other factors that determine the share price movement. There are a lot of other events that can come and affect the performance of a stock or the markets. So it's very difficult for you to invest basis these 5 points alone. But what I can definitely tell you is, please invest into markets on a regular basis and for long term. And if you do so, you will see significant amount of wealth being created from the market itself. Good luck, happy investing.